So we are now on the ChartMill stock screener page with all the available technical and fundamental filters. But for this purpose, we are not going to use the individual filters. I'm going to use a trading idea to search for the stocks which have experienced price extreme down. And to do so, I'm going to select the trading ideas section in the main menu. And in the next screen, I'm going to select long only. It's an intraday strategy, so day trading, and it's a mean reversion strategy, ChartMill screens only. And I'm looking for this one, the short price extreme down. So some more info about that. So this screen shows stocks that have experienced a sharp price drop in a short time and are therefore at least 9% away from their 20 daily moving average. The stock screener settings, so price is above 5, so to exclude all the penny stocks. There has to be a new 10-day low today, US only, and there is one custom filter which is used. The current price is at least 9% below the SMA 20. The stochastic is below 20, so an oversold level. The average volume at least 500K, so it is required to have minimal liquidity. And the performance today at max 0%, so this ensures that the most recent day closed negative. Then hit run. So in the next screen there are about 470 results. Now it's very important to identify not only the price extremes, but I only want to retain the stocks where the price is now very close to a significant support level. And to do so, the first thing I'm going to do is to select the main chart. I'm going to delete the 5 and the 10 simple moving average. And I'm going to add the consolidated support and resistance zones. You do so by select overlay to add, and then consolidated support and resistance. So ChartMill is able to identify automatically the most important horizontal support and resistance zones. And they are drawn onto the charts, as you can see over here. Next thing to do is to hit the support and resistance tab, and I'm going to specify that I only want to see the stocks where price is very close to the nearest support line identified by ChartMill. So consolidated support, current price 1% from the consolidated support line. And now I have retained only those stocks which are very close to a significant support level. I'm going to enlarge a little bit the stocks, the charts, so main chart. Now it's showing 4 months. I'm going to select best fit. As you can see, all the stocks, the price is now at a significant support level. Now, not all these 48 stocks are ready to be used as a real setup. It's very important to identify only those stocks which show a very profound price extreme. So I'm going to give you an example. Solid power, that is what I call a price extreme, and now price is close to support. Definitely Genco shipping, for example. Price is a heavy price drop, and now price is close to a very significant support level. So I'm going to add some of these stocks to a personal watch list. Click on the plus sign, create a new watch list. I'm going to call it the mean reversion. Setups, enter. Now G and K is added. I'm also going to add SLDP, solid power, so the mean reversion. Scroll down. LSB Industries is another one. Nice doji candle also. So adding to the mean reversion setups. This one. and this one. Okay. So once you have added all the stocks to your watch lists, open them in the stock charts page, so mean reversion setups. And by default, my screen is set to show the daily chart on the right with the SMA 20 and the consolidated support and resistance zones as identified by ChartMill. And on the left, you can see the 5-minute charts of the last closed trading day, in this case yesterday, Monday 13 June. You can modify these settings yourself via the tabs main chart and secondary chart. Just make sure that you have selected 2 charts as view and that for charts per line also 2 is indicated. The intraday chart is necessary because we use the red dog reversal strategy for this day trading technique. And there is a separate article available in our documentation section, and I will add a link below this video. So the first requirement for this strategy is the extreme price change, which we have already set up with the screener. Next, we take a look at the low of the last trading day on the daily chart. And the opening of the current trading day will determine whether the strategy can be activated or not. And the price should open above the low of the last candle. So basically, we want to see a gap up where after a number of days with very sharp price drops, the price suddenly opens higher than the low of the last closed trading day. And if the price does not open higher, the setup expires irrevocably. So if we take a look at price, for example, of Genco Shipping, the low is 20.76. So the current trading day price has to open above 20.76, otherwise the setup is no longer valid. So it's important to get the basic list ready in your trading platform so you're ready to react once that condition is met. And now let's take a close look at the actual conditions for a buy setup. And we're going to do that through a number of examples. We'll start with a chart of American Tower on date of November 18. This is the daily chart showing the extreme drop in price. It was the 6th day in a row that the price of the stock fell. The last candle had a fairly long undertail and a double bottom formed. The stochastic indicator was giving a clear oversold signal. Now let's take a look at the intraday 5-minute chart on date of 18 November. So on the left there is the lowest price level of 17 November, which was at 254.7. And next day price is opening higher than that low. The opening price was around 257.60 or somewhat. And the next thing to do is to wait for the first 5-minute bar close below the lowest price of the previous session. So in this case, this candle is the first candle which closes below the low of the previous day. And then we have to wait until the breakdown is rejected. And as you can see over here, in the next few candles, there was again a close within the existing price range, and that is our buy setup. So the stock is bought at the opening of the next candle, which follows the first candle that again closes above the previous day low, and then the stop loss is placed just below the low of the current day, as you can see over here. Now in this example, the long position has never been in any danger. For the exit, you can set a fixed target, or you can wait for the rest of the day, which in this case would have given you a profit of more than 2.5 in terms of risk-reward ratio. This is an example of a short setup in Cushman and Wakefield, 7 December 2021. So an extreme price movement with successive upward price gaps and price close to resistance. The stochastics which is above 80. And then the next trading day we have an opening price which is below the high of the previous day, At first, price is gaining, is rising, and there is a close above the previous day high. Then the breakout was rejected and closed again within the existing price range, which is our sell setup. So with a short stop loss just above the high of the current day. And then as a result, we have a position, a short position, and at the end of the day, a possible profit of more than 4.0 risk-reward ratio was possible. So also in this case, it turned out to be a perfect entry with a very short stop loss. Now, it's also possible, as seen in this example of Coca-Cola on December 16, 2021. Also a short setup, price versus SMA 20, price extreme, so price is far above the ascending SMA 20. If we take a look at the intraday chart, the first close above the previous high, and price went down but came back up, forming a double top. So in this case, the first position would be a minor loss, but the second attempt, that was a very, very nice, a very great entry. As we take a look at the closing price, that is a very big profit. So the next strategy is a swing trading strategy where positions are held for at least a few days or until the set target is reached. The strategy is based on the 2-period RSI indicator, and the article you see right now gives detailed information and is also available on the website. You can find the direct link in the description below. This strategy also looks for stocks that show a price extreme and where we then try to take a counter position. And again, I use a specific predefined trading idea to obtain a basic list of stocks that qualify. So I select once again the trading ideas page, long only. Now I'm going to select the swing trading as a time frame. It's still a mean reversion strategy and ChartMill screens only. So this is the one, RSI2 mean reversion up, more info. It's kind of the same as the red dog reversal trading strategy, the price extreme. But in this case, there is another technical indicator. Instead of the slow stochastics, we are using the RSI2. It has to be below 10. So if you then hit the run button, again, we have approximately just less than 400 results. And also in this case, I use the support and resistance step, consolidated support and resistance. In this case, we are looking for long setups, so current 1% from the consolidated support. And to make that support and resistance visible, I select the main chart. I'm going to delete the 10-day moving average and I'm going to add an overlay. In this case, the consolidated support and resistance overlay, and add indicator. As you can see now, we have the RSI2 indicator and also the next support and resistance lines, horizontal support and resistance zones are visible. So it's up to you to identify the best setups. As I've already mentioned, it's very important to only select those setups where there is a very clear definition of an extreme price move, an extreme downward move. Catalyst pharmaceuticals, for example. Another one is DHI group, although there are two bullish candles within that price decline, so that it's not something I like. This one is a good one, Star Bulk Carriers. It also appears on our red dog reversal intraday strategy. Principal Financial close to support and RSI below 10. Owens Corning, RSI 2 at 0, a very severe price decline with multiple gap downs. So prices at the moment far away from the descending SMA 20. So this one is also a setup to consider. So on an upward or a downward movement accompanied by an RSI value quoting above 90 or below 10 are the first two necessary conditions before this strategy can be applied. And then it's a waiting game. The next step is when the RSI 2 drops below 70 again, that's a sell alert, or it rises above 30, that's a buy alert. That is the final step before it's possible to configure an actual setup to enter the market. So in this case, TLRY, Tilray Brands, we have a price extreme. RSI 2 goes above 90 and then drops back below 70. So this is an actual setup. Also, and this is the actual setup then. Sell stop at 7.59 and a stop loss at 8.68. And in this case we have a bullish setup, a buy setup. So price comes down, there is a price extreme, price is far away from the descending 20 SMA. Price drops, RSI 2 drops below 10, then rises again above 30. We have a reversal signal, so the green horizontal line is the actual buy stop at 166.60 with a stop loss at 134.94. And in fact, on date on 12 May, I've shared an actual setup before market opens, ASTL. There was a triple bottom, a higher volume, and RSI 2 rising above 30 again. So there was definitely a price extreme. Price came near support. It was far away from the descending SMA 20. The RSI 2 did drop below 10 and then came back up above 30. So this was our actual buy setup, a buy stop at 8.46 with a limit at 8.54 and a stop loss at 7.89. Now this is the actual chart. The next day price opens at 8.51, and as you can see our buy stop was at 8.46, but we had a stop limit at 8.54. So with the stock market price opening at 8.51, our setup was triggered, and the first target is the SMA 10 was immediately triggered, and the second target is the descending 20 SMA. A couple of days afterwards it was also triggered. And as you can see, it is clearly a mean reversion strategy, so we are not trying to predict bottom or tops, because as you can see now price is again below that low of 12 May. So this is not a strategy for the long term, it's a counter trend strategy, it's a mean reversion strategy. There you go, these are two ways in which you can try to respond to exceptional market conditions, such as the ones we are experiencing today. And below the video I have added links to the two articles that were featured, and for each strategy already a video has been made and this link has been added as well. The big advantage of these strategies is that you can do most of the screening in advance, and the setups which seem to you to have the best chance of success can then be transferred to your broker platform, and then you can wait and see how the market opens and evolves. Finally, I want to repeat once more to be careful with counter-trend strategies and always adjust your risk to your available trading capital. Loss positions are inevitable, but they won't be a problem if you can keep them small enough. Trade safe, and I'll see you next time.